Morning all. How are we all doing? Happy Monday. How's everybody? Morning Harold, Danny, Steve, John, JC, Figinia, Burke, Kennelly. How are you doing? So if the lighting's a bit different and I'm a bit lit, I've got the window open. It's absolutely baking. Too hot. I normally have my blinds shut and the lights on so that it's better lit, but we're melting in the UK. We're not used to 30 degrees. It's not good. So if you hear like cars racing past and stuff, that's why. Morning Shroud, how we doing? Right, let's have a quick look at where we are and what's going on and what's been happening over the weekend. Kick off, not a lot actually over the weekend. It's been a bit of a quiet weekend this weekend, which is good. So we'll do a quick rundown of the news. Then we'll have a look at the DAX. And the opening range breakout. I'm just going to leave that there because just to remind me it's running. So I'm running a back test at the moment on the Dow. Morning, Amy. Right. So news-wise over the weekend, it wasn't a massive amount. Was hardly anything over the weekend. Actually, nothing. So this is Friday evening, and that's the weekend. So the only thing we had was the PPI figures this morning for the yen, which were negative. And we've just had UBS announce they've completed the Credit Suisse takeover. And Haskell's just come out and said that they are going to increase rates, which we know. So there's nothing exciting there. Don't think there's any reaction at all much on the yen. Didn't get much off the yen. Yeah, there's no reaction off the PMI figures for the yen. The Aussie dollar, I'm getting this on Friday. Remember, we had this incident last week where my broker stopped me out. It's nowhere near the swap, basically. Stopped out nowhere near the swap. That's my pen. There it is. Disappeared. So I got stopped out here. Swaps here, yeah, no reason whatsoever for that. Look at that. So this is this morning. So they spread basically one ADR. They spread an entire average daily range. So I'm done with them basically. As soon as I've got the account flat, I'm changing brokers. This is ridiculous now. You don't spread by a daily range. There isn't one person on this planet at the moment on the Aussie New Zealand, if they got into a trade south, that is in this now because they've stopped absolutely everybody out. Everybody. Nobody would have got in short there with, any stop loss you have on the Aussie New Zealand within 65 pips is gone. Not tradable. So I should be giving them some stern words and saying, on your bike, sorry, you don't want my money anymore? Fine. I should be changing brokers. Anyway, so that happened. News this week, as you can see, it's manic this week. We got red news all over the place. We got very important figures coming out all week. Today is dead. So Monday, we've got nothing. We've got 6 minutes to the open. So there's nothing much going on today. That's Robo Forex, John. Morning, it's time. Morning, Andres. So nothing going on with news at all today. Tomorrow, we've got claimant counts for the pound, which is unemployment related. So we might get a bit of a fluctuation off of that. Main news tomorrow is the CPI figures. So the inflation figures for the US are coming out tomorrow afternoon. So that is going to be the main driver for news tomorrow. And then we got Bailey speaking in the afternoon. So we've just had Haskell come out this morning and say that we are going to increase interest rate, or it's likely we're going to need to increase interest rates. If Bailey backs it up again tomorrow, which he's likely to do, then we'll get a pump on the pound. So we got the GDP figures on Wednesday for the pound, followed by PPI for the US, and then it's the FOMC. So it's the US rates expected to be as a 5.25, so remain where they are, and the press conference. So Wednesday, all hell breaks loose, followed by the GDP for the New Zealand. Then we got unemployment for the Aussie, again, massive key fundamental driver, followed by the rates for the euro, expected to increase by 0.25%, followed by retail sales and unemployment claims. Again, big driver for fundamentals. We got press conference on Thursday afternoon for the ECB. We've got the yen monetary policy statement, interest rates. They're not going to change the interest rates, but we've got the monetary policy statements, which lays out what they're going to be doing moving forward. And then we've got University of Michigan on Friday. So, and the Bank of Japan press conference, obviously part of the monetary policy statement. So every day this week, we've got a key fundamental driver for one of the major Forex pairs. So we've got the US dollar, we've got the pound, we've got the euro and the yen, all having, and the Australian dollar, sorry, all having massive news events this week. So today is going to be calm. The rest of the week is going to be total nuts. So be prepared. Where are we? We've got 4 minutes. So yeah, so that's what we've got coming up this week. Nothing, as I said, over the weekend. Quick rundown of the strategies. The ADR reversal strategy is doing very well this month. 7.3% so far. We're only on the 12th of the month, sitting in 3.7% of drawdown. Nothing there to worry about at all. Aussie dollar yen's the only thing that's really getting a little bit stretched. Aussie dollar's not letting up at all. We'll have a look at that in a sec. H1 mean reversion sitting in 15% drawdown. Part of that is 2 aggressive drawdown control positions that I've put on this Aussie New Zealand, which are just stuck. But yeah, 7.6% loss so far this month. Obviously, that can all come back. 2%, 3% days happen regularly, as well as drawdown control days. So if I hadn't have done the aggressive drawdown control on this, this would only be sitting in sort of a 3% loss, 3.5% loss, which isn't the end of the world. But this can all unravel instantly. It's just, we're stuck, absolutely stuck on these Aussies at the minute. H4 mean reversion, 25% drawdown on that one. The main thing is obviously New Zealand. I haven't been touching this account, so this has just been run totally by the EA, 15% drawdown. Drawdown control. Aussie New Zealand, look. So not able to get out of that at all. But again, this will all just suddenly go and bank at some point. It's just in a massive squeeze at the moment. But prime example of why we look at leverage and exposure. Yeah, 5 shorts on, it goes mental that way. You are going to get into big trouble. So that under control. H1 hedging, not having a bad month, 7.6%, 7.56% so far. Good day on Friday. Not a little bit of drawdown control today. There's not a lot getting into trouble here. Pound yen, euro pound, and Aussie New Zealand, as usual, are the 3 main getting a little bit tight. But obviously, as a hedging one, you're always going to be in drawdown. So that's probably the highest drawdown I've seen for the last quarter that we're in now, because we got a lot of squeezes going on, and as I say, obviously over leveraged, overexposed. So we've got a lot of squeezes going on the Aussie, so that's why that's got a little bit more. But obviously, the advantage of the hedging strategy is you are banking while you're going into drawdown. So as soon as those moves start to profit take, that will all shoot back down to 5%, all go over there, and then we'll be back to normal. So just waiting on those to move. 1 minute to go, so let's watch the DAX. We got a gap on the DAX this morning, so there's downside gap, 19 seconds. Let me just quickly have a look at the DAX on the other platform. So there's your gap to the downside. We've gapped up into resistance, so this is a 5-day sideways move we're in at the moment. So there's your pre-market has gone long. So upside targets are basically weekly resistance at the moment. So we're long at the moment. TP hit. That's nice, wasn't it? Job done. There you go. Bye. $866 for breakfast. So yeah, ORB's gone long. That's it. Dump of the day on that. So yeah, upside targets today last week's high, and then we've got these previous week's high here. I think one of those might be my line. That top one looks like mine. That. So, yeah, upside targets will be that previous week's high and last week's high, that area there. So we've broken out now into this propulsion gap. Looks like the sellers are not really interested at the moment. So look for a break up to those levels there, which is well within ADR today. After that, tricky, isn't it? So once we break out this high, there's no real strong support resistance zone. I would say probably that area there with that accumulation is probably your next area at 150 ADR. Failing that, obviously, last month's high. Yeah, so watch around about 3/4 of an ADR today. Watch for a pullback, but yeah, off today. Very nice. Morning, Diamond. Morning, Dreska. Right, there you go. That's the DAX done. That was quite nice and easy this morning, wasn't it? Very nice, tiny little, these ones where they go, let me just shut that for a minute. These ones where they just literally go. And you've got a really small range there. Really, really easy to make money on. No brainers, basically scalps are just straight in, straight out, done. It's just a shame it pulled back. If it hadn't pulled back, we'd be well on our way to that 5-hour target that there. Halfway there. So it's just a shame we got that little bit of a pullback. I've been running some tests with trailing stops here, DAX. This one. So the highest risk, highest return on drawdown versions of the EA are all running with 600% trailers. So I've run a test from 150% of the opening range as a trailer up to 600% of the opening range. The idea of the 600% being is like, we just shouldn't really hit that 600%. If we hit that 600%, it means it's gone really far and come back and it will break us even probably. So that's as good as not using a stop. And it does show that the highest return on drawdown, you can see all these are 600s there. So from 3.27 up to 5 return on drawdown are all pretty much not using a stop loss. They're using a 600%. So it's got to move 600% of the opening range, i.e. get that 5-hour target at least before it starts to trail. So in effect, there is no trail. So that seems to be the way to go. Just having your initial 1.5 hour plus a runner. The runner can range from 600 to 1500, whatever. But because we are closing out at the start of the New York session with the DAX, basically what it's saying is let the opening range go, don't touch it, either let it hit target or let it stop out. That's going to give you the best return on drawdown. So yeah, 86k. So it ranges between 70k basically to 110, but I mean the average is going to be somewhere around about 80k off of around about 11 to 12% drawdown. So 80% return. So it's return on drawdown is very, very, very good. So that's probably what I'm going to run as a live test. I'm running a test on the Dow at the moment. We haven't done the higher trails yet. I ran a test on the NASDAQ this weekend. So I ran a test on the NASDAQ. 39 hours, right? I ran it for. And then I suddenly realized I had the re-enter time set to 10:05 in the morning. So it was set wrong. So I had to restart the whole thing, and then I'd sort of thought, screw it, I won't do that. I'll just do the Dow because I want to trade the Dow more than the NASDAQ. So I've got to run the test on the NASDAQ again. But once these 3 tests are done over a year, I'll then run out of samples. Once I've run the out of samples, I think it's ready. So, and then I will start working on further testing on that other version of the opening range, which is the one where we just go bang straight in line with whatever direction. So this morning's opening range off of the test paper, you would basically have hit the long button there. Being a bit of drawdown at the moment, but so yeah, I'm going to run all the tests on that as well with the other version. So all looking good, all profitable. So again, yeah, there 1,056 tests run on the DAX, 1,056 profitable. So far on that Dow test, how many have we run? We've run 222. Tests run, 222 profitable. So 100% strike rate again, 100% profitable, which is good. So that's testing 1, 2, 3, 4, 5, 6 permutations, 6 parameters, with all permutations of all 6 parameters, which is all the key parameters that would, in my opinion, cause profit loss variance. So yeah, all good. Highly profitable. Right. Let's look at the position trading stuff. So your opening range break, there's your 15-minute pre-market as opposed to the 5-minute pre-market, which was there. So that was a nice break this morning as well. You got, I'm not sure if you would have got 1.5 on that. Might have done. Yeah, you got 1.5 hour on the 15-minute pre-market as well as the 5-minute pre-market. So both hit target this morning. And there's your 5-minute opening range there, which you've gone long on, which is the same as the research paper one that I'm going to test as well. ORB V1 plus DAX equals rent paid. Good job. Well, if that's your rent paid, maybe you can buy a holiday tomorrow. Or a car, I don't know. Right, let's look at where we are with everything else. So ADRs, nothing today. Completely flat on the ADRs. I'm not expecting a lot of movement today because it's all DAX missed for me on 25-minute, 15-minute. DAX missed for you on the 15-minute. Oh, you got slippage, did you? Yeah, it depends where you got filled, obviously, as to whether you got the 1.5 hour. You're still in it, though. So, still going. So, yeah, I'm not expecting a massive day today off of anything. I wouldn't expect a lot of ADR hits today because the market is not going to want to stick a ton of cash in to anything today with all this lot ahead of us. So, there's nothing really that you could take a position on today and think it's not going to get affected this week by the news. So, the only thing we haven't got, and we've got news on the New Zealand dollar in the form of GDP. The only thing we haven't got news on this week is the franc. Everything else has got major impact news. So the fundamentals for everything, obviously the only thing we've got that is not going to get affected by anything is the Swiss franc, but we've got the euro announcement, which is going to affect the Swiss franc. The Aussie dollar announcement is going to affect the New Zealand dollar, and we've got the New Zealand GDP. So there's literally nothing on the cards that we can't say at some point this week we're going to get an ADR on it. So today I would expect us to be flat while the market sort of waits for whatever to happen. Obviously the weeklies aren't hit. The monthlies we've got a couple on. Oh no, we haven't. I thought we did. No, where are we? 12. Yeah. No, I thought we had some monthlies. We haven't. So there's nothing to look at there. Flat as a pancake. RSIs, we've got a few. The Aussie New Zealand isn't extended on RSI. First time forever. So that has obviously stalled. We'll have a look at that in a sec. But Aussie dollar Swiss, You've got an hourly RSI extension to the upside on that one, which has been sitting up here since Friday, not going anywhere. So again, obviously the Aussie dollar's having a really good run. The Swiss francs had a really bad run along with the euro. So that's all potentially going to change this week. So the euro rates are going up to 4% on Thursday. I very much doubt we'll get a surprise on that. It'd be very unusual to see a surprise come in, but you never know. But I mean, it's unlikely. The market factored in May, we got given 3.75. That was the forecast. So the market basically went over forecast and then got it wrong. And that's why we've had this big tank. So we got the increase in interest rates, which caused a negative effect. This time, we've been told for all along, we've never had any indication of a 4.25. There's no reason why the market should have factored that in. So the market should now rally off the euro. So Thursday, we should get that pop. So the Swiss franc will power up along with that. So this will start to come back down on Thursday. So if we can hold on, if you're into Aussie Swiss at the moment, you've got any positions on it, or anything against the Swiss franc, basically holding on till Thursday means you're probably going to get paid. So at the moment, if you want to get into any, obviously this is extended on the hourly and extended on the 4 hourly. It got embedded here as well. So I think the Aussie Swiss, you would already be in it, obviously, from somewhere back here. So you'd be in it to the tune of somewhere around 2 ADR. Nothing. You're in maybe 4 positions on it. So we've pushed outside of those highs in a downtrend, obviously, waiting for the euro to kick in. Our next leg down. There's absolutely no reason why that shouldn't be coming down this week. So unless obviously the Aussie dollar has this massive rally, which it doesn't seem to be letting up at all at the moment. But the Swiss franc, when the Swiss franc powers up, the Swiss franc will overpower absolutely anything. So you shouldn't have a problem either way on that one. Aussie dollar yen. So the yen, we've had weak news again. So negative news on that one. That's extended, just about extended on the, it's on the 4 hour. So we were extended on the 4 hour, so we're extended and embedded. So that's your initial entry that you would have got on the 4 hour RSI extension. That's the hourly RSI extension as well there. So you can see there's 3 positions on this one, just scaling into it basically on this run up. No profit takes so far on that move. We just had an accumulation break, another one potentially, and then drop. So we are nicely extended, nice distance away from the moving averages. We're just waiting for the profit take move to kick in on the rally basically. Yeah. So we just haven't had the profit take yet embedded, because the Australian dollar is just not letting up at all. So all we've had with the Aussie is a push, a pause, a push, a pause, a push, a pause. And that's all it's doing at the minute. We're waiting for something to kick in to drive money back out of it. And this week, every single day of the week, this week, we've got catalysts to drive money out of the Australian dollar. Don't forget, if you're going to put money into another currency, you've got to pull it out somewhere else. Where have you just put it? In the Aussie. Where are you going to pull it out of? The Aussie. It's got to go into somewhere else this week. So we should see those moves kicking in this week. Yen, more negative news on the PMIs for the yen. So again, weakness on the yen. This could continue to go up. US dollar yen is your gauge for when the Japanese will intervene. We're contracting at the moment. US dollar this week, FOMC, we're going to get a big move, aren't we? So we're forecasting 5.25. We've got 5.25. If we get 5.25, the market probably won't be particularly happy with it. So it's more likely to come down. So that's your yen. Aussie dollar, US dollar. Aussie yen, rather. Aussie US, yes. Aussie US, can't talk. That's still pushing. Again, initial entry was back here on the 4 hour. That's extended on the 4 hour, still embedded. Aussie dollar just not letting up at all. So even against the US dollar, look, I mean, you can see where obviously you get US dollar strength coming through. We get these little profit take or flag moves back. But we're going to need some US dollar strength really to push this back down again, or for the market just to pull money out of the Australian dollar to put into other things. So Stuck at the minute, but they will profit take it. It will come back down again. Absolutely no reason to have a motorbike that loud, is there? On the US, so that's nicely extended. Got 2 positions on that one. We'll be getting into a third this morning. Another reason to leave Robo Forex, because they don't update their data. Chart. Why is the chart not working? Absolutely no reason for this at all. It's been sitting there. Why have you not loaded the data in? I don't know what is wrong with this terminal. So you're just about to get a reverse alert on that. Oh, you've had it already. Why did I not take another position? M1? What? So I was going to say M1. I haven't had a reverse alert. That's what I just looked at. And I was like, why did that give us an alert? There's Yancey there. Last one was down there. So we're looking at 32 pips. That's not hard. That's only half an ADR. I'm going to let the EA manage it. So your choice if you want to get in now. That's obviously starting to come down, but we are at previous resistance. So potentially this could turn into support. But there's a lot of targets to the downside on this. So up to you on that one. But it's extended on the 4-hour. Euro odd, hourly and 4 hourly. So hourly RSI extension. Again, multiple positions on this one. Australian dollar squeezing like crazy at the minute. Euro unable to... I mean, the euro, again, on Friday, completely scaled out. Just got nothing at the moment. I really don't understand it. It's the first time I've seen a currency, I think, react so negatively to a positive interest rate rise. That's where we got the positive interest rate rise. Yeah, that's what happened on the positive interest rate rise. It tried to recover and has collapsed again. Yeah, nothing but positive news coming out of the euro. It's just not behaving as you would expect it to. But the other thing you need to bear in mind is when you're looking at anything on an hourly time frame, you're looking very, very, very short term. Yeah, don't forget the market looks at everything on a quarterly basis. So what we're looking at here is just a small correction on this move at the moment. Yeah, so we're getting into it on a micro scale here. The markets are looking at swings. We are inside of it there. If you look on the 4-hour, yeah, this is where we are here. Yeah. We're just waiting for the next rally up. That isn't just not what I was expecting to see off of an interest rate rise. Sorry, that. But where we are right now, potentially the next bounce point. So it's a pullback on that leg up. So this week, euro pumping. So that's extended on the hourly and the 4 hourly. As you can see, got 4 positions on that one at the moment. Really extended, really embedded. We got down to 80 on this. It's just not able to get any legs at the moment because this is just hideously pushing badly the Australian dollar. So that's hourly and 4 hourly. You'll be in that already probably. If not, there's a good opportunity to get in this week ahead of the news. Euro pound. So again, pound is fairly strong. We should have continuation strength coming through on the pound. We've just had, again, this morning, Haskell, basically, rate increases. No reason why we shouldn't get some continuation strength on that. Claimant counts tomorrow morning and Bailey. Then we got GDP for the pound. So, but the pound will get pushed around on everything, basically. Every news event will push the pound around. So just taken one this morning on the H1M5 mean reversion. So looking to push back up. That one's rallying at the moment. So that's extended on your 4 hour. Was extended on the hourly as well, but that's a nice extension on the 4 hour. Same trade as this one, look, basically. Hopefully that just goes out in one, but is counter trend, obviously. So pound yen. So yeah, big strong currency against something that's been incredibly weak. Pound yen just completely flying. 4 hour RSI extension. Again, massively extended. I got out of this here initially because it didn't move. I'm very glad I did. It's up there now. Extended again. So again, this thing's just first time it got below the 50 on the RSI in pretty much a month. So solid strength on the pound, which we know we've had, and solid weakness on the yen. No real reason for that to come down at the moment. Not massively extended. It is extended, but just waiting on some yen strength. But I'd be more inclined to say this is going to rally and continue to rally the pound. No reason why it shouldn't at the moment. We will get some intervention though, and we will get some strength on the yen, and that's when you'll be able to take your profit. We just haven't had that push. We had a sort of 8-hour push on the yen in the last couple of weeks. That's it. It's just not had any strength at all, is it? So grinding nastily. There's a lot of nasty squeezes on at the moment. Nasty. Pound US dollar, got one on. Looking for a short. That's good. 4 hour. Again, all related to the news this week. No idea where anything's going to go on Wednesday. FOMC is going to be a real tricky one. So this is our peak interest rate. This is what the market and the Fed are forecasting as the max. This is where we are, and this is where they're saying we're going to stay. So if we get the 5.25 and that is released as we expect it to be, we're going to stay where we are, I think, until the press conference. When the press conference comes out, that forward guidance from the Fed is going to be the real key driver moving forward. It's either all downhill from here for the US dollar, or they're going to come out and say, I know we said, guys, this was going to be terminal. However, so this week, I think, will be possibly that tipping point. If you think of interest rates like an RSI, it's there. Yeah. That's where it's going. So this thing is coming down at a decent rate. It's slowed. This thing is going up. That going up means we need to put that down. Yeah. This going down to the levels we want it to be at means we can put this down. Putting this down weakens the US dollar. So moving forward from Wednesday, there's a very high probability we might see some weakness in the US dollar. Pound US dollar will continue to go up. So just be careful with these USs as well this week. It's one of those weeks this week where you just look at the news and you think, I just want to go on holiday this week and let them sort it all out, because there's so many news events here that are going to really tip the scales, I think, this week. And then as soon as we've got this month over, we're heading straight into summer trading, where it all goes a little bit illiquid and quiet and horrible and rangy. So I don't think it's going to be very much of a fun summer. We're in a really unique spot with interest rates we've never been in before. So, and we're coming to the end of them, hopefully, fingers crossed. Right, so that's all your RSIs covered. CAD yen. If anybody's got any other things they want to look at, let me know. CAD yen, Ratib. So CAD yen is stuck sideways at the minute. Same as the US dollar yen. So with the US dollar yen and the CAD yen, the market got a little bit of a slap last week up here, basically from the Japanese. As soon as we got to 140, they were like, wait, stop pushing. So they did. CAD yen will move in exactly the same way as the US yen. So this week, the CAD yen will do what the US yen does. The US on Wednesday at FOMC is either going to completely drive hard in one direction or sit sideways. I don't know. I would be more inclined to think it's bearish. If money starts to get pulled out of the US long term over the next quarter, it's going to go somewhere else. The yen is typically where we tend to find US money goes a lot of the time. However, at the moment, obviously, the interest rates are so unbelievably bad in the end. They have been for 6 years, but the outlook as well for the yen is so unbelievably bad. It's difficult to think that they would put it there. So you're more likely going to be looking at that sort of movement, I think, on the US and the CAD against the yen sideways. But don't know. It's not really set up for anything at the moment. Hasn't been since there's the last trade on that one last Friday before last. Haven't really traded it much, but yeah, that's what it is. Don't know on that. Henry, I'm trading so I can buy a bike. That's loud. Don't ban me. I don't have a problem with bikes, but there is absolutely no reason to have a bike that's loud like that. Yeah. It's just no point. I'm pretty sure it's illegal. In the UK, you've got a decibel limit on cars and bikes. I'm pretty sure if the police catch that, they'll give him a, oi, that's too loud, mate. And he'll go, sorry, and do absolutely nothing about it because that's what they do. Morning, Kanzai. So, yeah. You can buy one. I don't mind you buying one, Henry. Just don't drive up and down my street with it. I have no problem with bikes. Just they don't need to be that loud. DAX has pulled back down again. Going absolutely nowhere. Oh, wrong one. So we're back inside the range. So initial push was a fake move. So we got high, low, lower high, looking for a lower low. If we get that lower low put in and we break that, we're down to gap fill today. So it looks like a good short at the moment, but it's holding up at the open. So they're buying up out of this propulsion. Tricky one this morning. Kind of want to say short on it, but don't. Yes. Anyway, morning, Brian. What's your thoughts on pound CAD? Well, we're sideways at the moment. I mean, there's no it's a difficult one. Where you are at the moment from this move. So we had basically pushed down, 4 days sideways, broke out the range high, filled all those propulsion gaps. You are now stuck between a rock and a hard place. Going to go to one of those two. There's no clues, is there, as to where it's going? I mean, it's a short at the moment. If you look at it from a trend perspective, well, I say it's a short. It's not really, is it? It's range bound. I mean, you're bang in the middle of nowhere. You're literally in between last month's high and low. The question you've always got to be asking yourself with everything is, what direction is it going to go on the news? So if you look at the Canadian dollar, that is going to move with the US dollar. The US dollar, we've got CPI figures coming out tomorrow, which are forecast to be worse, or rather they're forecast to be down. So it's good. CPI is a double-edged sword. CPI coming down is brilliant for us because inflation comes down, we get richer. However, for a currency, when inflation comes down, interest rates come down, which is bad for a currency. So the CPI figures are forecast to be negatives. So if they're forecast to be negatives, the pound US dollar, the CAD US dollar, the pound CAD and the pound US dollar will go up. So the forecast for tomorrow is pound claimant changes to be coming down, unemployment rate to be dropping, bullish pound, CPI inflation figures to be coming down, bearish US, bearish CAD. So the forecast for tomorrow would be pound CAD long. That's the forecast. What happens is entirely down to the market. So if they sit here and accumulate all day today, and by the time they finish that accumulation, they've got a book balance long, they'll go long. If they've got a book balance short, they'll go short, regardless of what the news says. The news is a scorecarding system for long-term movement over 4 to 12 weeks. What they do tomorrow and for a couple of days after that doesn't have to go in line with the news. It goes in line with how they want to make money. They will move it in line with the fundamentals at some point, but they don't have to do it. Look at the euro. Yeah, it's bullish. So, you know, but like I said earlier, look at it long term, it is bullish. It's just we're in a pullback. So depends when you ask pound CAD as to what you're doing. If you're trading the 5-minute chart, it doesn't matter, does it? Get into it now. It's totally irrelevant. It's going to go wherever the hell it's going to go. But if you're trading it long term, i.e. your position trading it, you want to have a view on potentially going long on it. And don't forget, oil, still not happy. And obviously the US dollar is likely to come down. So just looking at oil while we're talking about it, we've been looking at this for a while, trying to figure out if we've got that peak formation low in, and we are going to run that next leg up to $83 to $85 a barrel. We've been asking that question now since the beginning of May, and we haven't got anywhere. So Canadian dollar and the US dollar, obviously a lot of oil export, especially Canadians. It's their main export. So oil coming down, CAD's coming down. Oil is not able to get any traction, as you can see, whatsoever. It's gapped down this weekend as well. So this area is holding beautifully. So if we get back down to there, potentially we're looking at a bounce, but you are just still holding in a range. So the next move, if we do get down to there, and don't forget this is only ADR today, if we get down to here today, ahead of the news this week, and oil gets a bounce, that's going to rally the CAD. There's a lot of things to think about at the moment, but if you look at the buyer's scorecard with virtually everything, I say everything at the moment is still in a range-bound state. There's nothing that has a particularly fundamental edge at the moment. So, look at these Australian dollars. Yeah, there's no reason why the Aussie should be going absolutely crazy like it is against everything else, or rather everything should be so weak against the Australian dollar. It's just happening. There's no fundamental reason for it. We are just all over the place at the minute. We are holding on the DAX, just a sideways mess today. Far. Do you still keep short pound New Zealand? I'm not short on it, no. There's no bias on it. There's no entries on it at the moment. Sideways. Out of the pound New Zealand on Monday last week. We had a better exit on Tuesday, but and again, pound New Zealand. Obviously, the New Zealand dollar's had a decent run with the Australian dollar, but the pound is obviously off on one. So everything seems to be at the moment at a point where you just think you've got to come down at some point. There's so much strength on these Australasian pairs and very little else at the minute. We're at the point where it's going to flip at some point. It's just a case of when. And if we get another leg, what we don't want this week is a load of negative news. If everything this week comes out as negatives, these Australasian pairs are going to benefit massively from it. So that would not be fun. Aussie, New Zealand, pretty much. If it breaks the high today, which it looks like it's trying to do now. So there's your yesterday's high. Oops. So that's last week's high. Previous day's high here. So this is all within an ADR. So if we get a test of this level today and a rejection, I would say that's got a very high probability of holding and then starting this move. However, this is one of those pairs where when that strengthens up, so you just get that little edge, as we've seen. It's just that horrible, horrible, horrible pair to get into squeezes on because it's just grindy. Again, New Zealand, increase interest rates, massive negative effect. What can you do? If the market don't want to do it, market won't do it. Morning, Neo. Right, nobody got any other things to look at? Because I haven't got anything else to cover today. We're just a case of waiting for stuff. So I'm going to get on with development this morning and some more testing. DAX, you're stuck, but you got the gap fill there. So don't forget, lot of these get filled the same day, and 78-ish. I'll have to get. I keep saying 78%. 70+% get filled same week. So, I'll have to dig out what the exact percentage is that I've calculated on it. But if it doesn't fill the same day, it fills the same week. Yeah, there's one there. There's one there. That was the same day. There's one there. Same week. So, yeah, so that's why I'm saying this area pretty good short today, if we can get there. If we can get there. So push up today would be a nice potential short if you want to hold it as well. Could you give your thoughts on the ORB V2 trading prop? It's not a lot of difference, really. So you with this strategy, you're still going to get stagnation. It's just you'll get. I mean, I have to run the profit curve, so I can't answer that question. It doesn't. You could basically go onto Google and put in trading strategy, find one, trade it on prop and pass prop. Yeah, 1 week. The next week you'll fail. With the same with this. Yeah, this week this will kill it. So far, this. I mean, version 2 that we've been running so far in the last month. Done 17 grand. I don't know what the max daily drawdown's been. I don't know what the max drawdown on the account's been, but I know it's banked 17 grand in 12 days. What it's going to do in the next 12 days, I couldn't tell you. It might just have 3 days where it hits 4.5 grand max loss in the trot and you'd blow an account. I really, it's the same as any strategy. And this is what I keep saying about prop. Yeah, prop is set up to make money out of evaluations, and you will never find a strategy that is going to work on it. Every single one of the strategies I run, I blow accounts constantly, blow accounts, but I constantly don't blow accounts and withdraw that money. It's a business, same as everything else. Yeah, you're going to put in 5k. If you can make more than 5k out of the accounts you would pass with 5k's worth of valuations, you've made money. So the thing about this that I like is the speed of this 5 minute. But you can trade this with the opening range breakout version 1. You don't need this new version of the EA to do this. This works absolutely fine with version 1. In fact, I'm trading this with version 1 at the moment in exactly the same way. The only difference is the inside bar break recovery on this one, and the fact you've only got that one breakout level. So, it's virtually the same. But the inside bar, to me, is more fun to trade. And this is the thing. It's not as much fun, but it's more, you can recover losses very nicely with the inside bar break and get some of that initial loss back. Because don't forget, this is a one-hit thing. Yeah, it works or it doesn't work. The beauty of the ORB version 1 is you've got continuous mode where it keeps getting you in and out. So this is exactly the same situation, but it's just got a different way of getting you back in and out. At the end of the day, your P&L is still going to do that. Yeah? I'm not building a holy grail. I'm just building a different way to trade the same instrument. But for me, with less pain. I can't stand watching ORB V1. I just can't stand watching it. That's my problem. When I'm trading it, or when the EA is trading it, it drives me up the wall. This, I think, is going to drive me up the wall less. It's a psychological thing, it really is. This isn't any better than the version 1. The other strategy that that paper was written on, that is a different strategy totally to the ORB strategy. So that one, I think, might have a completely different one. A different result and a different way of trading it. So, but yeah, the nice thing about this is, I mean, we've been watching this trade, haven't we? Look, I mean, get the P&L out. Let's get the P&L out and put it in Quant Analyzer. Because the nice thing about this is the recovery. But I mean, you're going to get loss days where it's going to hit max loss, the same as everything else. But there's more days, I think, on this one where you have small losses rather than big losses. And that, to me, is the real advantage to it. Come on, where are you? So that's the equity curve from it so far. I mean, it hasn't really had a loss day yet. This is the thing, is it? So we went straight from 5 to 13. That day was the day where every ORB went 5R. So the DAX opened 5R. Then the NASDAQ opened 5R. Dow opened 5R. S&P opened 5R. Thank you very much. Evaluation passed. Stop trading for the month. Off we go. That's the beauty of it. It's just amazing when you get those ORBs. That day, we basically had lots of trades where we didn't go anywhere. I think I'll break this down. I haven't used this for a while. Proper analysis. I thought you could break it down trade by trade. No. Come on, tooltips. Anyway, but so that day we had winners, losers, broke it even, slight win, slight win, slight win, the break even day, and this morning. So that's the equity curve at the moment. It's a lot smoother, obviously, than when you have the other one where it just hits a loss and then that's it. If it doesn't, that's the difference between the new version and the old version. That opening range is what controls everything to do with the EA. So we take the trades on it and we only re-enter if price enters back into the opening range, and then we get another crack. If that doesn't happen, that's it. We're done for the day. Yeah. With the inside bar version, whenever we pause, we get a second bite of the cherry. So you get those big runs back and those other continuation runs that you wouldn't get with the initial version. So it just gives you that chance to get that money back, which is great. But and obviously we've had massive slippage in this as well, haven't we? As well, it's slipped horribly. Lots and lots of loss with slippage. Doesn't do very well. 6 o'clock. I don't know what that is. So yeah, Thursdays and Fridays are the good days at the moment. It's only been trading for a week or so, but anyway. DAX, US indices. Look at that. This just shows you the power of the opening range breakout, yeah? That column there and that column there are the first 5-minute candle. These columns are everything after that initial cash balance. That's where the money's made. That's where we need to get the trades on. That initial cash balance candle is the one that makes the vast majority of the money. Everything after there is absolutely insignificant. It's not insignificant, it's all profit, but it's, you know, compared to that one, that's where the money's made, that candle. Because we know it's going to be violent and know it's going to be big. So it's whether we can keep getting the trades on. That's the question, isn't it? 1.67 profit factor, 118 trades taken, 48% strike rate. Don't know. Development. In development still. Henry, if I'm scalping FX pairs 5 minute and 1 minute, would you leave the RSI on 14? I wouldn't touch it. Wouldn't touch the RSI on those time frames. Don't use them. Can't answer that question. You're scalping algorithmic chop, so you might as well flip a coin. You've got as much chance of the RSI working on 5 minute and 1 minute chart as you have of flipping a coin. So use a coin. It's easier. You can get in now. Look, you don't have to wait. If you want to use the RSI on the 5 minute chart, I don't use it, but flip a coin now. And if its heads go long, if its tails go short, because if the RSI is up there, it doesn't mean it's not going to do that on the 5 minute chart, because it's just algorithmic movement you're measuring, which is not really tradable. Trade price action. Don't use indicators. The 5 minute chart. Scalping, indicators and scalping are just too hit and miss. Yeah. If you look at the retail sentiment, in here, that is what you want to pay more attention to if you're going to use an indicator, if you're going to scalp. Yeah, 97% of the market at the moment are hitting the short button on the Aussie dollar, New Zealand dollar, and they have been for ages. Yeah, 97% of them are hitting the short button. Yeah, why are they hitting the short button? Because they're all trying to mean revert an oscillator which is sitting up at the highs on the 5 minute chart. So this is pushing. Yeah, just coming up to the last week's high on Aussie New Zealand. If you want to short it, use an indicator that the rest of the market are looking at, a level of price where it's rejected before. That's the best indicator in the world. Support resistance. That's where it moves and turns from. Turns because it hits a level where there's limit orders triggering shorts. Doesn't turn because there's an indicator that's popped up and put a little arrow on your chart. It moves because there's a limit order sitting there. There's a volume of banks going with the sell button. That's where you sell it. US 100, we look at that this afternoon. It's US indices. US is shut. Are you still holding Aussie New Zealand? I am. There we go. I've got 2 aggressive drawdown control positions on it. I'm about to lose another 3 to 5% of the account. It's going to be a losing month, put it that way. Nothing I can do. This is, think of every month like a trade. I only take 12 trades a month. Can't do 12, I've only got 10 fingers. I take 12 trades a year. Yeah, this is one of those trades that's going to lose this month. It's going to be a losing month. Might be able to put it back, but squeeze months are your losers. That's position trading. On my account, I'm running at -6 and a bit. This is running at 7.67. So I'm not in a dissimilar situation on Aussie New Zealand. I've got 1 less aggressive drawdown control position on. I haven't got this one on. I have got that one on. I haven't got this one on my account. So yeah, still holding, hoping for a double top basically. So we've got so this is what, one kind of, since we hit the high, this is the third stroke fourth day sideways. It's the first time since here we've had a sideways move. So we seem to be going in weekly cycles at the minute. So we obviously had the push and then continuation up. Then we went sideways, pushed, sideways, pushed, sideways. Yeah, so when you look at it from the news, we've had 2 accumulation periods. This is the third. So if you're looking at the 3-leg scenario, you're coming down. Yeah. However, Steve Marrow's 3-leg scenario, I've disproved many times by getting 2 legs, 4 legs, 5 legs, whatever legs. The market doesn't move in legs. It moves because the banks want to make money. And if they are balanced long, they will go long. regardless. So just hoping that we get enough sellers come in here to drive back down. So it may be a case of today we just come up and we test this liquidity. We find there are sellers here. This is where the sellers started the downward movement. The buyers have been battling like crazy to get control back. This is the first time they've managed to take back control, but the sellers haven't had a second bite of the cherry yet. So we're either going to get a big rejection here or we're not. And if we're not, we're going for another leg. If we're going for another leg, you've got to close some of this out because you don't know when this is going to stop. Yeah, we're 6 ADR. It's unusual to get a movement beyond sort of 5 ADR. This is 6 ADR straight up. Look. This was a fundamental shift. This is totally the opposite. This is New Zealand dollar having a positive news event and a massive negative reaction to a positive news event. This was the Aussie dollar, New Zealand dollar interest rates causing a negative move, which was correct. This is exactly what should have happened based on the fundamentals. This is exactly what should happen based on, actually, this is what should happen based on the fundamentals for Aussie New Zealand. They both put their interest rates up. They're both doing really well. Neither of them have got anything negative. There's absolutely no reason why the Aussies should be so much more powerful than the New Zealand dollar at the moment. It's just being squeezed, but this is what the market does. They have the power to do it. They will do it. They will keep squeezing until there's nobody left to squeeze. When they finish squeezing, they'll come back down again. Your job is to hold the squeeze. And how long you hold the squeeze for is down to the size of your Caracas, if you know what I mean. DAX testing previous highs. So this is 2 weeks ago. Then we got last week's high there. So this zone here, the DAX, you may well find limit orders triggering shorts up there. Failing that, we're looking at 225 ADR this week. Steve, for me, it's the daily drawdown that's the problem. So understanding what settings can be adjusted to control that. You can't. The only setting you've got to control daily drawdown is this one. There. Close everything when you get to that loss. Yeah, you can't control the daily drawdown. The daily drawdown is whatever the market. If the market wants to go like that, you're going to hit maximum number you've got in there. So the lower you put the number in there, that's how you control your drawdown. The market's going to do this, and it's not going to be conducive to a breakout or a trend-based strategy for the day. That is your only backstop. Nothing you can do. Trailing stops will reduce your drawdown. So when you get a range-bound day or move like that, the trailing stop will reduce the loss that you take on that trade, but it will also, as you saw this morning, stop the profit as well. So, but yeah, trailing drawdown will keep your drawdown low. So when you look at the results in here, you can see the drawdown here. In this column here, the larger numbers. So when you're sitting up at the 18s, 19s, 20s and things like that, these are the ones with the bigger drawdowns, bigger trailing stops usually, and the bigger targets. Trying to find, there's not actually a massive amount of drawdown in this test. Yeah, see, maximum was we've got a 32s, 25s to 30s. Yeah, tighter drawdown, tighter trailers. So the tightest trailing stop used on this test is 300. That's where those high drawdowns sit, because on those days, you're going to get stopped out of the ones where you go push, pull, push, target. That stops you hitting target. But it reduces the days when you go like that, it reduces the losses. It's a double-edged sword. You can't win. You can't control it. The market is random. The market moves where the market moves. You've got a strategy. You just need to get in. Some days it's going to be huge wins. Some days it's not. Which is why if you take 10 evaluations, you will pass 3 of them. Out of those 3, you will get funded. Out of those 3 funded accounts, you will get 1 or 2 of them that make you 10 to 15K. Walk away with 10 grand. Spend 5, get 10. That's the way you play it. It's really, well, that's the only way I can see to play it, because I can't find a strategy that won't have a drawdown. Never have, which is why I do what I do. You can reduce your lot size, Steve, as well, obviously. Yeah, I mean, if you reduce your lot size, you're going to reduce your drawdown. So again, if you want to do that test in the ORB EA, if you go use a decent set file with a decent result, if you reduce that down, but leave the max loss where it is, obviously this one's not set up. It's sitting at 25K. That would be set at -4.5 for a 10K account or whatever, 100K account. So you'd set it at your 5% max daily loss, or just below it. You change your risk to much smaller. What it's going to do is it's going to allow the EA to take more trades. It will completely change the results of your test. Completely. Because the days where you would stop out here with 0.5% risk, if you used 0.25% risk, obviously those days, it won't stop out at 10:30 a.m. It will continue trading beyond that because you allow it to. So you're going to get totally different results. But, you know, this is, I mean, all backtesting is backtesting. It's what's happened in the past. There's very little you can do to control the future, isn't there? Dallas, what comes up must come down. It will do, otherwise it can't make money. Aussie New Zealand daily looks like higher high, lower high. So yeah, I mean, Aussie yesterday, Friday rather, was the first day. Yeah, I mean, we looked at this, didn't we? So we're on, what is this now? 1, 2, 3, 4, 5, 6, 7, 8. Day 14 of the squeeze, basically, and all you've had is nothing but higher highs all the way. Yeah, until there. Then we put in a lower high and a higher low inside bar. Then we put in a lower high and a lower low, which is bearish. So that is the definition of a reversal. Yeah. So you put in a lower high and then a lower high. That becomes a fractal. So now we're putting in a higher low and a higher high. Back bullish. But it doesn't mean that we're going to go up. Don't forget, this day is not even started yet. We're just, the market's literally open now in London, just about in the last half an hour. We haven't had New York session. This candle could end up with a stalk like that and a whacking great bear move on the bottom of it. For all we know, we've got no idea, which is an outside bar. Again, indecision. So until this day's closed, there's no decisions to be made. We don't know what we're doing yet. The market's just opened and it's a Monday, and we've got the biggest news week we've had for a month today, this week. So all hell's going to break loose this week. These highs here at 150 ADR are kind of your yearly high from last year, back in March, February. So a retest of those is likely to find resistance. But, you know, we've gone from all the way down here, all the way up to there. And it's basically been in the trade since the beginning of that move, since the very first movement of that. What do you mean the New Zealand dollar's weakened on positive interest rates? That's ridiculous. You know, it's just, it's got to profit take at some point. We haven't had one. Yeah. Even in strong trends, you have profit take moves in trends. It's an accumulation, but you profit take. Yeah. That was a squeeze, obviously, as well. So that's what I mean about this Aussie New Zealand. I'm fast forwarding out of love with it. It's the second squeeze it's put me through in 6 months. But look at that move there. I mean, there literally we haven't had one pullback. Nothing. Yeah. They have not taken profit on any of this move. When they do, it's going to be fast and it's going to be hard and it's going to be multiple days. But when it's going to happen, no. As long as there's people willing to sell, they will buy because they're in so much profit. They can't not really make money, can they? So, I came within $9 of passing my prop challenge on the DAX. £9, right? Well, be careful. Just take a little trade and hold on to it. So with the DAX, right? If you hit the short button here with a very small trade, you probably get 9. It's going to look at that. We've got 1, 2, 3, 4, 5, 6, 7 candles straight up in the last on the 5-minute chart. Yeah, if it's going to be going up for half an hour, at some point they're going to take a little bit of profit off of that. You need £9. That's where you get it. Somewhere in here. But make sure you get out when you get that £9. Good job, Harold. Right, that's all I've got for you today. I will leave it there. Back this afternoon for the NASDAQ. Be keeping an eye on, obviously, this Aussie New Zealand. It's on my monitor here and stays on my monitor here at the moment until... but again, frustrating as hell, this thing, for the last 3 days. Literally. Promise. Not delivered. So we'll see what happens. But yeah, only need an ADR move to the downside to get out. So there's average. So that's all we need. One ADR. Just give me an ADR. That's all I want. Just if you're going to pull back on this 13-day move, just give me one ADR. I'm not asking for much. Just an ADR. You don't even have to stay there. If you just move down by one ADR and then push back up and put in a hammer, I'm fine with that. Just pull back an ADR. That's all we want. It's like... Anyway, leave it there. I'll be back this afternoon. Anything you need, let me know. I'll be in Telegram. We'll obviously trade the NASDAQ and everything this afternoon. No news, as I say, today, so I wouldn't get too excited today. I don't think we're going to see a massive amount of movement because the market's going to be sitting sideways. So I think today is a day for doing other things because you're not going to get a huge amount of movement unless something happens, obviously. So keep your eyes peeled on financial juice, but we're waiting this week. All kicks off tomorrow. All right. So I'll be back this afternoon at 2:20 for the New York session. Same time tomorrow, 7:50 for London. And we'll see you guys then. Have a good day and see you this afternoon.